I'm getting older. Subscribe to my channel and share this video with friends, please. Buyers and sellers might easily establish strongholds on opposite sides of the market. Many investors are keeping a careful eye on this parity because it might be the starting point for a lot of potential movement in the financial globe. What was once impossible might now become reality. Now, GBP USD parity is within reach. Since the beginning of recorded history, the British pound has never traded at a par with the US dollar. These traders and investors are keeping a careful eye on the potential that GBP USD may reach parity because they understand how important it will be if they do. The British pound dropped below $1.14 for the first time since 1985 as a combination of dollar strength and recession warnings weighed on the UK as currency. This is major news. Sterling fell as low as $1.135 at 8:50 a.m. London time, marking a fresh 37-year low before rising slightly to $1.146 by late afternoon. It followed the publication of figures showing a 1.6% fall in August retail sales, which analysts at ING said showed a deteriorating consumption picture in the UK. Fears about economic growth, anticipation of additional rate increases, and ongoing energy market volatility weighed on stocks as European markets traded down. The pan-European stock 600 finished 1.6% lower, with all industries and significant bourses in the red. The FTSE 100 in the United Kingdom sank 0.6%, the DAX in Germany dropped 1.7%, and the CAC 40 in France dropped 1.3%. Several industries, notably media and food and beverages, saw declines of about 1.5%. Despite data showing a gain in new car sales in the European Union for the first time in 13 months, auto stocks declined by 1%. Over the past year or so, the value of the euro, the official currency of 19 of the 27 members of the European Union, has decreased. On July 13, for the first time since 2002, it reached parity with the dollar. High energy prices and record inflation were considered to be to blame. Europe is far more dependent on Russian oil and natural gas than the U.S. to keep industry humming and generate electricity. Oil prices have increased due to worries that the conflict in Ukraine may cause a loss of Russian oil in international markets. Additionally, Russia has reduced its natural gas shipments to the European Union, a move that EU officials have characterized as payback for the sanctions and armament deliveries to Ukraine. Compared to most of continental Europe, the UK is less reliant on Russian supplies, which account for 8% of total oil imports into the country. In 2021, 4% of the gas and 27% of the coal consumed in the UK were imported from Russia. Coal, oil, and gas imports from Russia to the UK totaled PS 4.5 billion in 2021. It's clear that the US dollar is rising rather than other currencies falling too much. The relatively strong performance of the U.S. economy, tightening monetary policy by the Federal Reserve, and safe haven buying, these look likely to remain intact into 2023. Moreover, there are few attractive alternatives to the U.S. dollar for global investors. Will the GBP reach parity? If GBP USD reaches parity, it will be a new beginning for the financial world. As volatility increases, Henry Drysdale, head of currency options trading in NatWest Markets, advises investors to prepare for further pound depreciation. The narrowly avoided dollar-sterling parity is not NatWest's main argument, but they nonetheless advise clients to look for protection against it in the options markets. In his article, Drysdale stated, "We believe the market hasn't yet fully priced in a premium for the increasing uncertainty for the months ahead. The currency has just experienced a small respite as the dollar declined. The currency has been struggling due to a combination of complex politics, high inflation, and an impending economic slump. However, on Tuesday, it started to fall again, approaching $1.14, its lowest level since 1985, as a result of hot U.S. inflation data that strengthened the dollar and reignited wagers on an aggressive Federal Reserve. This year, investors have consistently dropped the pound. Losses have been most pronounced against the dollar, but the currency has also declined by about 3% against the euro. In Britain, a record current account deficit of more than 8% of GDP exists, in addition to persistently high inflation and fears of a recession. This gap could widen as the government plans to spend money on regulating home energy prices. According to options markets, there is a more than 25% likelihood that the GB plus exchange rate will reach parity within the next 12 months, Drysdale continued. That is more bearish than Bloomberg's forecast, which predicts a 19% likelihood that the pound will reach parity in a year and is based on volatility calculations and economists' assessments. The rising dollar is attractive for U.S.-based investors. Let's see what will happen with GBP. The USD is looking unstoppable.